Is Bitcoin finally waking up from its slumber? After weeks of sideways price action and fading momentum, a powerful rally has pushed BTC back into a critical short-term holder zone, which raises the question, is this a new bullish phase on the horizon, or just another fake out? Well, in this video, I'm breaking down a key cost basis level Bitcoin just reclaimed, and why it matters for short-term sentiment. How rising investor profitability is quietly laying the groundwork for a euphoric breakout. And the return of short-term profit-taking, and what it reveals about the strength of this rally. After several weeks marked by quiet trading and thin liquidity, the market has finally shown a decisive reaction to a significant macroeconomic development. A wave of optimism was triggered by recent comments from the US administration, hinting at potential tariff relief on Chinese imports. This has fueled a strong rebound across both equity and crypto markets. Bitcoin in particular has seen a notable price surge, managing to temporarily climb above a key on-chain metric, the short-term holder cost basis, which currently sits at $92,000. This metric represents the average purchase price of coins held by recent buyers, typically those who are more reactive to short-term price movements. It often serves as a psychological and structural pivot point during market shifts. Historically, when Bitcoin has been able to hold above this level for a sustained period, it has signaled the end of bearish phases and the beginning of a more confident, bullish trend. However, much like the brief uptick seen between July and September 2024, this current move has so far only resulted in a fleeting reclaim of the cost basis level. While this suggests the first signs of renewed bullish intent, it stops short of confirming a full trend reversal. For a stronger conviction shift to take place, Bitcoin will likely need to maintain price action above this threshold. Doing so would indicate growing investor confidence and an increase in unrealized profits for short-term holders, both essential ingredients for a more sustained rally. Bitcoin's recent climb to the mid-90,000 levels has been matched by a clear improvement in investor profitability, as reflected in the recovery of several key on-chain metrics. One of the most telling among them is the percent supply in profit, which has now climbed to 87%. A notable rebound from the lows seen in March when the market was still reeling from a broader risk-off environment. What stands out here is that the last time Bitcoin traded near this same $94,000 mark, only about 82% of the circulating supply was in profit. That 5% difference tells us that since early March, a significant portion of coins have changed hands at lower prices during the sideways and downward chop. In effect, newer market participants have taken advantage of the weakness, accumulating at discounted levels and thereby lowering the overall cost basis. This shift has pushed a greater share of the supply into a profitable state, which is an encouraging structural sign. Historically, once the percent supply in profit crosses above the 90% threshold and remains elevated for a sustained period, it has often coincided with phases of rising optimism, FOMO-driven inflows, and broader retail participation. These are the early hallmarks of a euphoric stage in the market cycle, where strong profitability becomes self-reinforcing through renewed buying pressure. While we haven't quite reached that point yet, the recent momentum and improvement in profitability metrics suggest that the groundwork is being laid for such a transition. If current conditions persist, and if profitability continues to broaden, it could set the stage for a more decisive shift into full-blown bullish sentiment in the weeks ahead. One more sign that Bitcoin is approaching a critical decision point is the behavior of the short-term holder realized profit and loss ratio, which has recently rebounded to a neutral zone and now sits at approximately 1.2%. This metric provides insight into whether recent market participants, those who acquired coins within the last few months, are, on average, sitting in profit or loss. A reading near zero indicates a balance between profitable and unprofitable short-term coins, marking a psychological equilibrium for this sensitive investor group. This balance is important. In previous bear markets, this ratio has often remained deeply negative, with zero acting as a resistance line. Each time the metric climbed back towards zero from below, it tended to coincide with local tops, moments when short-term holders began offloading their coins, stalling upward momentum. Now that the ratio has crossed into mildly positive territory, the market finds itself at a potential pivot. If Bitcoin can sustain this level and continue pushing higher, it would suggest that short-term holders are increasingly in profit, and more importantly, that they're not rushing to sell. That behavior would support the idea of a healthier recovery gaining traction. Watching how this ratio evolves in the coming weeks, especially in conjunction with broader profit-taking patterns, could offer key insights into whether this rebound has the strength to transform into a more enduring uptrend. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. Finally, it's important to look at who is realizing profits, as this can reveal deeper nuances in overall market sentiment. For that, we turn to a key on-chain metric known as the Spent Output Profit Ratio, or SOPR. This indicator measures the ratio between the price at which coins are sold and the price at which they were originally acquired, effectively quantifying how much profit or loss investors are locking in at any given time. Focusing specifically on the SOPR for short-term holders, we see that during the latest rally, it's this cohort, those who have acquired their coins recently, who are leading in profit-taking. This is the first meaningful breakout of the short-term holder SOPR, above the critical break-even line of 1 since late February, suggesting that recent buyers are now selling their coins for a profit. This is a constructive development, as it signals renewed confidence among short-term participants. Historically, when this metric trends consistently above 1, it reflects a market environment where investors are realizing gains without triggering a wave of panic selling, an important dynamic for the sustainability of bullish momentum. Continued strength in this area would reinforce the case for a maturing recovery, with short-term holders not just in profit, but actively participating in a healthier, more orderly market cycle. So, to wrap things up, the market is definitely showing signs of life again. Bitcoin reclaiming the short-term holder cost basis around $92,000 is a promising early signal. It tells us that a momentum is starting to shift, even if we're not quite in full bullish territory just yet. It's a level that often acts as a psychological pivot, so watching how price behaves around it in the coming days will be key. We're also seeing a clear improvement in investor profitability, with the percent supply in profit rising to 87%. That means more coins are now in the green, and importantly, that shift happened while price was still consolidating. That's a sign that a decent chunk of supply changed hands at lower prices, positioning the market for stronger footing moving forward. And perhaps one of the healthiest signs of all, short-term holders are actually realizing profits again. SOPR is above 1, showing that recent buyers are selling at a gain, but without sparking panic. That kind of behavior supports a more balanced, sustainable market. It tells us people are confident enough to take profit, but not rushing for the exits. All in all, it's not a confirmed breakout just yet, but the foundation for a stronger recovery is starting to form. If these conditions hold, it could pave the way for a more decisive return to bullish momentum. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.